That is something that banks look at. When architects and draftspeople start to get in trouble on their mortgages, that is actually a warning sign internally at the bank that the construction industry is going to slow down in the next 18 months.
Yeah, and it's not like the architects and the engineers are now really busy. They're now really struggling. They're still getting made redundant, which means that the construction industry is going to be like that for a while.
Yep.
It's interesting that you said that about Wellington specifically too, because I've had a few conversations with not bank lenders, but non-bank lenders who shoulder a lot more risk. And they actually have quite an issue with properties in Wellington at the minute. And they're kind of not wanting to lend money on security there because they're worried about the state of specifically that bubble of people.
Welcome to Checks and Balances, brought to you by Partners Life. I'm Michael. This is James.
This is Makayla. And this is Jess.
And this is the episode you've all been waiting for.
We're back in your life, and we've been wanting to do this one for a while with all four of us.
And our producers keep being like, no, the sound isn't right. We can't get the look right. Whoa.
So if you complain about the sound, especially because Mike and I are sharing a mic, a James between two mics, do not complain about the sound, otherwise we'll never do this again.
Yeah.
But this is going to be good.
Yeah, it's going to be exciting. The point of this episode is that we kind of want to do a bit of a review of 2024. So the good, the bad, the ugly, things that we've all personally learned throughout the year, as well as things that we've seen going on in the market. So shall we start with the good? I think that's a nice place to start.
Yeah, let's start with the good.
Good news.
Yeah.
I think the top good in our lives has been the housing market recovery.
Well, I don't know if it's recovered yet, but there's definitely some green shoots. If you're looking forward, it's looking like it's going to be a much brighter kind of 2025 than it was in 2024. And I think part of that, which no doubt is one of the other goods, is actually interest rates coming down.
Yeah, we've seen some really great movement in the interest rates, especially now we're at the last portion of the year, and there's been some really good changes, which is making everyone super excited again.
It's mad when you look when we update clients' financial projections, and you go from a 7.5% interest rate to a 5.5% interest rate on $1 million mortgage. That's 20 G's a year that you've got to spend on whatever you want during the summer.
Yeah, I think we refinanced. We did one refinance this year, and it was over $15 million. And the average interest rate went from a pinch over 7% to I think 5.7 or somewhere around there, which is an enormous amount of money they are saving.
Yeah.
I think something really satisfying that I've seen recently is some of our clients that bought high LVR lending at the top of the market, and seeing them move from almost 8% interest rates to now being able to remove the low equity premium off their rate and come down to 5.99 has been really great.
It's going to be me, and I'm so excited.
Yeah.
I cannot wait. And as we know, as interest rates come down, houses increase in value, lending is cheaper. So for people who invest in property, maybe homeowners that were in negative equity, this is also a really good sign, right? Things are moving in the right direction for those people.
Yeah.
And for the people who took the opportunity this year or last year to buy a house and get in on the ladder, it's been really good.
Absolutely. And James, Jess, you guys are all things shares, markets, portfolios. I imagine it's been a good year for them. Talk to me about it.
I know, Jess, you were like, the best thing was the property market. And I'm like, when it comes to holistic financial advice, property market's gone down, share market's gone up 30%. Surely
true.
We're happy about that.
Yeah, I guess so. But I keep a long-term view, James, and I don't get too excited. With the big ups and the big downs.
It's just the pessimist and the optimist.
Exactly.
Yeah, I am the eternal optimist. Literally. I need to get Jess up, and then Jess
we
is
balance
like,
each
you're
other
too
out
optimistic.
quite well.
Yeah.
The next good thing on our list is that inflation has come back under control. So we've definitely been struggling with a bit of a cost of living crisis, certainly off the back of COVID and things like that, but that's starting to come back down under control.
This whole recession has been engineered because of inflation, right? And essentially to go, that's under control, that's sorted. You look at other parts of the world and then they went down and then they jumped back up. That seems incredibly unlikely to happen here.
So inflation showed significant improvement. It's dropped from 3.6% in mid-2024 and projected to enter the reserve target range of 1 to 3% by the end of the year. So that's looking really positive.
Yeah, surprising that they cut the official cash rate before then. It kind of indicates how bad a shape the economy's in, which again is not great now. But for us forward-looking optimists on this side of the bench, we find that really exciting, yeah.
And it's done the job that it was meant to do. So
Yeah, almost too well, some might
almost
say.
too well. A little bit of an overcorrection.
Yeah.
The next thing, boost in tourism revenue. Have we noticed more tourists around the CBD?
100%, I think.
Really?
Yeah. I mean, I'm walking up from Britomart to High Street pretty much every day of the week. And the amount of cruise ships that have been coming in.
Disney one down there at the
Disney
moment.
one was there. I hear so many different accents going up the street, big groups of people walking around the city. And lots of sports teams coming through too, which I haven't seen much of in the last couple of years.
I always wonder, what are they talking about? You know, they do the tour groups and the walking, they talk about stuff. They do it on High Street. I'm like, what are you talking about?
I actually overheard them the other day, and the lane with all the pubs around the corner.
Vulcan?
Apparently, yeah, they're the oldest pubs in Auckland.
Huh,
They're
right.
just down here?
Yeah.
Like Queen's Ferry?
Yeah.
Yeah.
Oh, yeah.
I also
yeah.
find it really
They were made
funny.
in the 80s.
I think we're still down on pre-COVID tourist numbers, though, which is not great compared to other parts of
I
the world.
don't think that's surprising when you consider the cost of living crisis, not just in New Zealand, it's
Yeah.
globally, right? And for a long time, people retrenched to traveling in their own countries. Now people just aren't spending.
And you also have to remember, like, we're so far away from other
very
countries
Ages
that
away.
it's very expensive to get here if you live in the States.
I would like to talk about the good stuff from all of us.
Oh,
So what is
okay.
something that's on the finances side or something you've learned? What would you put as something good for the year?
I bought a new house and then I bought 12 units. What have you mate?
Yeah, I would say the multi-unit with Ilsa was definitely a highlight.
Yeah.
Learnt heaps, made some money.
Oh,
Have
you'd
a
say
cle-
making $1 million in 7 weeks was a highlight, James?
Yeah. Look,
Wow.
I mean,
Surprising.
You talk to the marketing team, right? Like they'll just put anything on paper. But that was pretty cool.
Yeah. That's good.
My highlight next year, you may ask, Cooper hits 3. My daycare bill goes down.
Ooh, that is
That's
huge
pretty
saving.
exciting.
I think my highlight for the year was buying my first house. So I spent a lot of time overseas and kind of playing catch up a little bit now, I think. But I could buy a house a lot sooner than I thought, thanks to the Lighthouse team. So yeah, that was my plus. Bought that in March. And yeah, looking forward to next year.
So your highlight wasn't making $1 million in 7
Unfortunately
weeks.
not. Maybe that's the
Makayla.
5-year goal.
What was your financial highlight from 2024? Hit me with it.
You know, my financial highlight was probably one, getting over all of the wedding costs that were killing me in 2023 as I planned my wedding.
Great wedding.
And, you know, actually this year we've paid down quite a bit of debt. And so I'm pretty sure James would be happy to hear that because I've been keeping my finances secret from him.
Although you say that, you've missed your financial review. I refuse to do one with you. Ravi, our marketing manager. I will find you, Ravi, and you will do your financial review and you will repent for your sins. Moving on.
Shall we move on to the bad? Economic contraction in New Zealand. So the economy shrank more than expected, which is a bit sad, marking a slower recovery than we thought. Growth forecasts had been revised down due to weaker domestic activity and global uncertainty.
What does
So
that
we'll unpack
mean?
that,
Yeah,
yeah.
that's a lot of words, Jess.
Okay, if I can summarize that,
Please
it's taken
do.
longer than we thought it would take.
Yeah.
Like, I think if we look at what we were saying at the start of the year, a big part of it was, 2024, it won't happen immediately, but things will get a lot better, and it's just dragged, right? It's taken a lot longer. And I think part of that was probably we look at the average amount of time a recession lasts. You go,
18 months.
Yeah, 18 months. And if you go kicked off, start of 2022, like surely we'll be finished by the end of this year. And we are where we are now.
Yeah, and I mean, it's a tricky one, right? Because that economic contraction means different things for different people and different families. And some people have been hit really, really hard by it. A lot of people have lost houses and had a pretty tough time. So yeah, it's pretty nasty for a lot of people.
And jobs.
Yeah.
I mean, you talk to anybody down in Wellington. I mean, safe to say Wellington's a mess at the moment.
Yeah.
Harsh.
Their property market, the employment market. I mean, you think about how much everything is tied towards like the government sector in Wellington and all the suppliers that get impacted. Like they're trying to get government workers to come work back in the
Yeah,
city.
the foot
'cause there's-
traffic for the cafes and things like
For
that.
sure, for sure. And and then it means there's no confidence. People don't want to hire that extra person. It's a bit of a mess. And there's lots of other industries where like engineering's another one, where if you think about you trying to do some like infrastructure work, obviously that's all been tied off. It's
really
tough for
interesting
a lot
because
of
that
people.
starts that is really easy to kind of see coming. because it actually doesn't start with the construction workers. It starts with architects and draftspeople. They run out of work and then they go into hardship, and then it just literally keeps falling down the chain. So you can actually see that coming a long way off. And that is something that banks look at. When architects and draftspeople start to get in trouble on their mortgages, that is actually a warning sign internally at the bank that the construction industry is going to slow down in the next 18 months.
Yeah, and it's not like the architects and the engineers are now really busy. They're now really struggling. They're still getting made redundant, which means that the construction industry is going to be like that for a while.
Yep.
It's interesting that you said that about Wellington specifically too, because I've had a few conversations with not bank lenders, but non-bank lenders who shoulder a lot more risk. And they actually have quite an issue with properties in Wellington at the minute. And they're kind of not wanting to lend money on security there because they're worried about the state of specifically that bubble of people and their employment.
There's actually one of the big banks as well that is quite shy on Wellington at the minute.
Yeah. If you want me to flip this around and turn to a bit of a good story, you want to hear about the part of the country that is doing pretty well?
Invercargill.
Invercargill.
I knew you were going to say Invercargill as soon
Where
as you
else are you
started that
talking
story.
about?
The smelter has been locked back in for 20 years. So there's a population of about 50,000 people in Invercargill. I think there's about 3,000 people.
50,000 legends.
Yep. That love a diesel. There's about 3,000 employees. And then there's in terms of suppliers and people that's impacted, I think it's another 20,000 people plus dairy prices. Milk solids are up.
I love it when milk solids are solid.
If you think about those two main things, it's a big thing for Southland.
Yeah.
So are they expecting growth?
Invercargill's in
Invercargill?
Southland.
Pardon?
Southland.
Yeah.
Where did you think it was?
Let's keep going.
Invercargill's the bottom of the South Island. Where did you think Southland was?
I'm not even from here, and I knew that.
I know there are listeners in Southland. Feel free to roast Mike.
Roast Mike.
Yeah. They've done it before. They'll do it again.
Yeah.
Okay, so moving on to the government budget deficit, that sort of ties into what we were talking about Wellington before. So the government deficit has actually increased significantly. So 9.7 billion in 2023 to 13.4 billion in 2025. What do we think?
I don't think much. It's not
Goes
much
up, it goes
debt
down.
for a government to take on. Our government could take on significantly more debt, and we would still be relatively low out of comparable countries in the amount of debt we've taken on. And I would argue that instead of just dropping house prices or interest rates, they could go about fixing the economy a bit by increasing some of that fiscal stimulus. But don't just waste it. Actually, spend money on projects that are going to make a difference, and that'll kickstart the economy.
I do agree with that. I think there's the inflationary pressure, though, is that if you're trying to get inflation back down and the average Kiwi is in pain from interest rates, and if the government didn't try and cut and reduce spending and they're still pumping it up on the other side, that would have an impact.
I agree. However, the lag on these things is huge. So you could kick off projects now. You won't see any huge economic impact. If I'm going to build a motorway from Invercargill to Waikato,
You have no idea where
He
you're
thinks it's a small motorway.
you've got it. You start with the planning, right? The economic. It's not like they're going to pump, I don't know, $2 billion via infrastructure projects into the economy over a month. It is not helicopter money. I would say that some fiscal stimulus is needed in the economy, and it's needed pretty soon, so that by the time the economic impact hits, we're not up Craps Creek without a paddle.
If you said to me, could Mike find Invercargill on a map? I'd say no. If you said, could you find Waikato on a map? I'd say yes. Now I'm thinking no. I would say the last thing on the government spending is government spending can be used to stimulate economy. I agree. I think the question is around the wasteful spending and are those dollars going to the right place and making an impact?
But that was my point. Your infrastructure spending cannot be helicopter money that's trucked into an economy for no good reason, right?
Tied into all of this as well is rising unemployment. So not only are there deficits, but we're also seeing a lot of people losing their jobs. And certainly in this office, we come across, people come back to us from their financial plans and say have been made redundant. We're seeing a lot more of that at the moment. We're feeling that in here.
Well, there's definitely a reason why we're all in the room today. Guys, the takeover's been great.
We have not lost our jobs.
Yay. Unemployment's reached 5.3%, which which is quite sad.
There's the human element, and then there's like the looking at it from an economic macro perspective.
Yeah.
5.3% isn't a huge number, certainly when you think about where we are at the moment. When you look at individual to individual, and those people have families and it puts stresses on them, and they have mortgage and interest rates really high, that's tough. Before we move on, we talk all the time about planning and growing our wealth, but protecting that wealth is just as important. That's why having the right insurance in place can help when life goes unexpectedly.
And that's why this episode is brought to you by Partners Life, a New Zealand operated award-winning insurance provider with over 300,000 Kiwis insured and 89% of claims paid.
Partners Life understand that having some insurance is better than having no insurance. They have flexible and personalized solutions for any budget or situation.
Check out their website in our show notes below.
Housing affordability. So although it's been the cheapest it's been in a while to buy a house, housing affordability is still a pressing concern for a lot of people, especially in places like Auckland. It's still looking pretty unachievable for a lot of people. And, you know, there's been high construction costs and labour shortages also making things difficult for people.
Yeah, and if you want a really interesting take on that, definitely listen to our podcast with Sam Stubbs, where he talks about housing affordability, the housing crisis, and how he's going to fix it.
Yeah, I think there's a lot of people that, because James always says, don't try and time the market. But I think there is a lot of people that thought, oh, I'll wait for house prices to come down to buy, not realizing that, you know, the rates are going to go up. And so they still can't afford to get in, unfortunately. And there probably was a time where they could have slotted in, but sometimes, you know, you wait too long and it's just as bad.
Yeah, you just got to pull the trigger. Okay, any ugly personal finance stories to share? We've done our good ones. Trying to think of some bad ones.
Well, I went through a separation, and that's never pretty.
not cheap.
You know, especially on your finances, you go from a joint income household to a single income household. You know, your costs go up. The actual process of getting separated can be quite expensive as well. So I would say on a personal front, you know, that kind of is what it is. It's quite ugly.
You said you went from a joint income to one income, yet you and I used our joint income to buy 12 houses together, and we now have a relationship agreement.
Oh, cute.
Do you really?
We have a relationship agreement.
Do you?
Yeah.
Is that part of it?
Yeah.
Fun.
Well, because we have to talk about, you know,
Of course you do.
if we're gonna, if
If
Mike
you
wants to
split
sell,
up?
Sorry, we have a shareholders
Yeah, I was
agreement.
gonna
We
say,
do
we
not
still
have
call
a
it a
relationship
relationship
agreement.
he did not read the contract.
James and I do not have a contracting out agreement. However, James and I do have a shareholders agreement.
Yeah.
But no, I think it, you know, that's always difficult, and we're seeing a lot of that in the mortgage team, which is financial hardship because of people splitting up, and financial pressure is one of the key reasons that relationships split up.
Divorces and recessions, eh?
No,
So
it is
hands
true.
in
We are seeing a lot of that. People trying to buy each other out, and yeah, it can be a bit ugly, as you said.
Especially when you got to sell when the market's down. You know, you bought in 2021 like I did, then you got to sell in 2024 when the market's back. Whew, not a
At
good
least
time.
you get to split the negative equity between two instead of one person having it all.
What a beautiful point of
Yeah. Ooh, I think my ugly for the year has been that my husband has been retraining this year. So we had a bit of a drop of income. We also bought the house and had that mortgage to pay. Anybody who's just bought a house knows that first year of mortgage repayments is pretty hectic. So yeah, budget's been tighter than previous years, but we're getting through it. So that's been the ugly for me.
I think my ugly was at the beginning of the year, we tried to sell our house, not because we thought it was a good time to sell, but just because we thought, let's see if we can. And in doing so, I uncovered a lot of really not great things about my house, which kind of left us tossing up. Do we sell it at a loss? Do we sit on it? Do we reclad it? Do we burn it to the ground?
It's too damp to burn it to the ground. Okay, it won't burn.
Mike started calling my house like the Noah's Ark because it's basically just sitting on a pool of water.
I'm funny.
No, but it was like, it was quite ugly, and ultimately we've still got the house, so I've still got to figure out what to do about it.
Guy Fawkes 2025 are going to light it up.
The insurance company's going to look at this and be like, claim declined.
Jimmy, what's your ugly?
I think probably just generally things taking longer than you'd hope they would
Yeah.
take in terms of like paying down debt, accelerating the plan, all of those sort of things.
I mean, it hasn't been the rosiest year for business as well. And
Mm.
like, while we've managed to survive pretty well at Lighthouse, and you know, it's been a good year. You know, there's definitely been some stressful points around the finances. I know earlier in the year when, you know, Cooper and everything, you know, they can be a bit stressful.
Yeah, for sure. Babies are expensive.
Yep.
So yeah, that's our good, bad, and ugly.
Yeah.
A couple more goods to touch on before we wrap
Finish
it up.
on a good note.
Yeah, the first one is the takeover.
Oh,
We didn't talk about the takeover happening in 2024.
Yeah.
Very
It's
kind
not
of
just
you.
becoming the James and Mike show, but there is a crew of us now, which is very
Yes.
exciting because this whole podcast is all about different voices, different people kind of, learning and being more interested in their finances. And that has been incredibly cool and successful. So
Yeah.
well done.
Yeah.
Congratulations.
Thanks, guys. Thanks for having us.
Yeah,
Join
yeah.
you.
Thanks for letting us in.
And then Makayla's getting stopped
in the
walking
street.
down the street.
Becky with the good hair.
It's been really fun, and it'll be exciting to see where we go next year with it.
Yeah.
Yeah, for sure. And we've got big plans. We do have to say, I mean, we say it every time, much love to Partners Life for sponsoring this episode. Like, Partners Life have been huge for us in terms of being able to have an in-house podcast specialist to really help us grow the channel. I mean, we now have probably like 50,000 downloads a month, which is just, I mean, it's crazy to think about how many people that are listening to some finance bros and some finance gals voices that many times a month. So it is very cool. And make sure that, like, the best thing you can do is if you find this useful and you find a topic on paying down debt or budgeting or planning for a wedding or buying your first home, whatever it is, send it to your friends, send it to your loved ones, help them plan for 2025 and think about what they're going to do to move forward. Please subscribe to the channel if you haven't already. Please give us a review, give us a like. We'll catch you next time.
Cheers.
Thanks.
Bye.
Bye.